So Miles, as a reminder, is the CIO, and I am the CEO of a company in London called Stouty Capital. Stouty Capital is seconded into the ASX listed Global Value Fund. We've been ASX listed for 10 years this July. And we're a team that has a very strong independent board. You guys will recognize all those names from the IPO. And as a reminder, GVF is a boutique investment strategy. We have a unique strategy. We're not stock pickers. Instead, we go around the world looking for a very specific type of investment. Now, that specific type of investment around the world usually they usually have three things in common. They tend to be listed, they tend to be closed pools of capital, and they tend to be closed pools of capital that can hold pretty much any asset class. So we can buy global shares, we can buy global bonds, we can buy anything across the asset spectrum. If it has a value, it has interest to us. Now, if you or I want to invest into those investments, we do so by buying shares on an exchange. Ideally, the value of those shares should match the value of the assets of the underlying portfolio, but it's in cases where they don't match and where the shares are actually worth less that our ears will prick up as something that's interesting for our investment strategy. When we do find an investment that works, we like to explain to our investors that we eventuate two sources of returns for them. First, there's the returns that come from the underlying assets that we've purchased. And then secondly, there's the returns that come from the fact that we purchased those assets at a discount and we've then sweated that discount out. And we've done a pretty good job of that, to be honest. And that pretty good job, we've annualized at 11% per annum after all fees and expenses, has been used to pay investors a high income over time. And it's been a very consistent income. We paid the first dividend within the first year of listing, and we've paid one every 6 months thereafter. As well as paying that high consistent income, we've also put a huge emphasis on capital protection, protecting investor capital. Now, I appreciate that a lot of investors will potentially talk about protecting capital, but rather than talk about it, I think I might just show you a picture. And I may well have shown this to you in the past, but it's just worth reminding. This graph hopefully demonstrates our ability to protect investor capital. It shows every single investment that we've ever made in the 10-year period that we've been going. And it shows the profits there on the left-hand side of those trades and the losses on the right-hand side. And hopefully when you look at this graph, you can see two skews. First, there's a lot more wins than losses, which is hopefully a good thing. And then secondly, the quantum of the wins versus the losses is really, when we make money for investors, we make money. And when we lose money, which is inevitable with all investing, we have this real ability to protect on the downside. To say this graph in another way, in the 10 years that we've been going, we actually haven't had a down year. So we haven't had a negative year of performance. We came very close in FY 2020, but still managed to eke out a tiny positive return, which in the end matters. I mean, that's a little bit about GVF. I know a lot of you guys know us already, but I just thought it was worth a quick little summary. And then because it's our 10th birthday, which is quite a big milestone, if you think about it, we thought we would just go on a bit of a timeline, remind ourselves of what's gone on in the decade that we've been in existence. So let's rewind back to 2013. And this guy has been trading this strategy for a while at that point. And has had a few high-profile cases in the Australasia area, but it's around this time in June 2013 that Miles and I meet Jeff Wilson for lunch. And at the time, Jeff was actually, if you know Jeff Wilson, at the time his WAM capital was probably a fifth of the size that it is today, and he probably only had 3 funds. So he was much smaller. He was keen to see the space grow, and he said, "Hey, I'll introduce you to some good board members." And he did. He introduced us to Chris Cuff and Jonathan Trollope, and I'll take you around. You can meet my investors, and we'll see what they think. And I vividly remember Miles coming home to me one time and saying, there's no guarantees at all, right? Like, nobody knows me. I don't know how many people actually understand this strategy. This could really blow up in our face. And I remember thinking, it was just before we were about to get married, because we've just had our 10th anniversary. I remember thinking, wow, this guy's a real catch. But we carried on. And it actually worked out really well. On the 17th of July, 2014, we raised 54 million, more than was expected, from 1,600 amazing shareholders, a lot of whom are still with us today. And the strategy started off strong. What I'm going to show here on the graph is I'm going to show our performance over the 10-year decade, but I'm just going to tell you what events have happened at certain times. Now, you will know what those events did to financial markets. Most of the events were shocks to the financial system, but in the background, I will show you what GVF has done. So we got off to a strong start and paid the first dividend in that year, in the November rather, following. And we'd pay a dividend there every 6 months after that point. And it wasn't an easy time. I mean, June 15 to June 16 was a very tricky time. China in particular was down 43% over that period. And it was around this time in June, kind of early 2016, that I came on board as the CEO. And it's kind of just as well, because we started to get some real shocks. We had Brexit, which really wobbled financial markets, in particular the London Stock Exchange. Then we had the surprise at the time election of Donald Trump, which again was quite a shock. And because there wasn't enough going on, Miles and I decided to have our first child. By the December 2018, markets had to deal with the worst December since 1931. But again, we continued to kind of trundle on and keep going. And it was around this time that we decided that it would make sense for us to employ a co-portfolio manager in London. And it was a real boon for our business. We ended up hiring a chap called Mark Ambrose, who we'd known for a very long time and had a huge amount of experience in our particular strategy. And he joined us just in time for COVID, which obviously was something that was a big shock even to our performance. That year, however, we did manage to rebound quite quickly and still, as I said, produced a positive return. It was followed by our best year in 2021. 2022 sees the Israel-Hamas war. Russia invade Ukraine, and it remains a very difficult thing for markets to digest. FY 2022 was a very, very tough year for asset classes across the board. Everything pretty much lost money. But again, GVF was managed to produce a almost 3% return. Around that time, Miles and I would leave the headquarters of the UK to our team of 5 over there, and we've set up an office in Australia to focus on the Asian and Australian markets and to spend a bit more time with our shareholders. And then we had the breakout of the Israel-Hamas war, which again has wobbled financial markets and continues to be something that is troublesome. So I hope that by going through these 10 years, I hope what I can illustrate to you is, despite the volatility of the markets, despite how much has gone on, despite how many distractions Miles and I might have had at home, we've still managed to kind of produce those consistent returns. However you've chosen to use GVF, whether you've invested at the IPO and reinvested everything, your $10,000 would be worth just over $24,000 today. If you invested $10,000 and you've taken the income, you would have received $8,000 in income, and your 10,000 is worth just over 11,500. However you've chosen to use GVF, I hope that you'll agree that these first 10 years have been something that we can all be very proud of. And I hope that you won't find it too presumptuous when we wheel out the birthday cake a little bit later. On that